What's up, everybody? And I want to start off this video talking about something that's really important. Um, there's a few steps that when it comes to trading, you have to follow. Number one is developing your edge. That's by far the least biggest problem. Everybody has an edge. Everybody finds their own edge, whether it works or not. The edge is important, but the first step is identifying when are you going to enter. The second step is identifying where are you going to place your stop loss to protect your money. And number three, the biggest problem is that people don't let their trade play out and they sell too soon. Now what happens is that when you sell too soon, you're not allowing for you to get the most out of the trade. So if you put on a trade and you make $1 and then your stop loss is $1, then that's a 1-to-1 risk to reward. What does that mean? That means that one day you're gonna have a stop loss or you're gonna have a losing trade that you got emotional with, whatever the case may be. It was a bad day, news came out, whatever the case may be, and that day is gonna draw you back 2-3 weeks of trading. You traded for 2-3 weeks, you won a little, lost a little, won a little, lost a little, and then one big losing day is gonna set you back for weeks. And the reason why this is because you're not letting your winners win. It's important to let your winners win. That's why you see a lot of traders say, oh, you need to have a runner. You need to have a runner. While this is true, it's better to have a structured way to place a trade, place a stop loss, have a good risk to reward, have a profit target, and then when you hit that profit target, have an exit strategy. And that's something that a lot of traders are missing. But the step one is letting the play out. That means that you're trying to make decisions while the trade is on, right? First of all, this is a game of probability. So the first thing you need to do is understand that there's going to be trades that work and there's going to be trades that don't. But the difference is the ones that do work, you need to let them win. If you don't let them win, then you're not going to last as a trader. This is why you need to be disciplined in letting your winners win. Now, there's definitely strategies that you could implement or figure out on your own, but we all know that sometimes figuring things out on your own leads you to losing a lot more money than you had to. I know from experience, I know I've been through it, and you need to let your winners win. And one reason that I could tell you you're not letting your winners win is because you're putting on too much money in the trade. That means that your heart is pumping. You're afraid that you're going to lose the little bit of profits that you're in. The way that you combat that is by understanding your edge and understanding probability, and finally not having so much money in one trade that you can't think logically. So please pay attention to what you're doing when you're placing a trade. Make sure you have an edge. Make sure you have an entry strategy, an exit strategy, and a take profit strategy. These are the most important things about trading. Otherwise, you're going to be circling around. One day you win, one day you lose, one day you win, one day you lose. And this is the biggest problem I come across with the colleagues that I help build an edge and build a strategy that fits them. All right. Now let's get into SPY. I want to finally go over. I know I have been away from my desk for a while. I want to go over SPY and I want to go over maybe a few tickers so that you can see where the market stands right now. Okay. So we're going to always start by looking at the weekly on the SPY. And we're going to start off by looking at this 2022 downtrend. We finally broke out, retested, and now we have 3 consecutive green candles. So that lets you know that we are actually in bullish order flow and we have bullish momentum. So what that means is that we are in the right direction and the candles are letting us know that we're actually getting higher and that we have conviction in that direction, right? We have this little channel here kind of to identify where the next swing high can be, right? So we look at the daily chart now. Looking at this daily chart, we are finally over the 50 period moving average. Even though this candle is red and possibly a reversal, what we want to see tomorrow is if actually trade a higher than 405. So 405 is the level right now that we're looking at. And we want to trade higher and close above this 405 area, right? So on the hour chart here, you can see that we're pretty much been trending up for the last few days non-stop. Like there has been no selling in sight other than these few hours here today. But in reality, the longer term trend is strong, right? At least for these last 3 days. So we finally broke out here. We're seeing continuation here. This could have been another entry for a swing trade, but the room for potential is not that much, right? Because we already ran for a while. So we have this 405 level here. It looks like we're rejecting already. But let's see. Maybe we can trade higher tomorrow and close above that 405 area. So now we're going to get into some bullish stocks. We're going to start off by putting in Apple here. Apple's a bullish stock, and we want to take a look at the weekly also, right? So when we look at the weekly, we see that we're up against this bearish trend line here. But we closed above. Now let's see if the week actually finishes off that way. When we look at the daily chart, we gapped up, right? And we have 2 consecutive gap ups in the Apple ticker symbol. But we want to close the week above this trend line, and then next week hopefully we can break out and trade higher, right? So tomorrow, will we break above this 163 area? Maybe. And that'll give us enough room to run till let me see, 175, 173 area. So this will be 174, so 173 area, the last swing high. That'll be our profit target above this 163 area, right? Another bullish ticker that we have is NVIDIA, right? Let's clear this chart here. So yeah, it's been super bullish, right? Week after week after week after week. This would have been a beautiful swing trade if somebody was holding this for months. Wow, look at the price action on that. But anyway, looking at the daily chart here, we have this resistance coming up at 275. So that's what we're looking to break above tomorrow, is that 275 area. We want to break above and close there, right? We have this uptrend. If you look at the hour chart, and then we have a box here. I'm going to draw that out for you. So up, down, low, that's the box right here, right? So once we break above this and close above here, now we know that this is the next leg up. The next leg up meaning that that's the next move, right? Like if you picture legs walking in stairs, this is the next leg up, right? So now we want to see, I would like to see this take a break, honestly. I mean, I know we took a break right here, and let's see if we can get above this 175 area and close there, because the market, if we can get a SPY above that level that we mentioned, and Apple crosses that barrier on the 2022 downtrend, and this breaks out, then the market is going to be super bullish. But let's see, because it's 2 consecutive gap ups. Let's see if that's buying or that's something known as exhaustion, when it's like the last buyers stepping in and then it's going to start selling. So let's see which one is it, right? Another ticker that we have here that's pretty bullish is MSFT, Microsoft. So over here we can see we have consecutive buying for weeks, right? Now we're breaking out of this consolidation here, right? We have this consolidation right here. We have one candle above. So tomorrow we want to trade above this 284 area, right? So we have this 284 area, and our next resistance seems to be right here at 294. So, I mean, there's not much room there, but you can take it for day trades, or you can take a short swing on the hour chart, right? So once again, you see this move up. It's pretty simple when you just start mapping it out this way. This move up, then you have the high and the low, and it creates this box, right? So now we're looking for a break above 284, and we want to hold above that area, right? You have one red candle here, but we want to trade above that and close the week strong. If tomorrow we see a sell-off, that's not going to be good for the SPY. That's not going to be good for anything, because that means that the weekly candle is going to change. And if the weekly candle goes from green to red, that could mean that we could see some selling coming in for next week, right? So if we do see some selling, we're going to start going into some bearish ideas, right? And we're going to start off with SQ, Square. Square has been a bit bearish, even though that we see buying for the last 3 days. The bigger time frame is letting us know that we are bearish, right? This is one candle that's green, and we're downtrending in the stock, right? The moving averages are in order to the downside. So even if I drew a little channel here, right here, we can clearly see that this is bearish, right? This is bearish. So we have this red candle here. If tomorrow we do have a selling day, this is going to be one of the stocks I'm going to be looking at, and we're going to take this trade under 67, and we're going to go down to about this 60 area here to the bottom of this channel, right? So this is what I'm looking at for bearish plays. I'm also looking at the banks. The banks have been selling off for a while now. We have JPM, right? If we take a look at this, also selling, one green candle. But I would like to see this get out of this consolidation under this 125 area. You can start putting on a small position under 127, but 125, and I'm looking down at 122 here, which was the last low. That's what I'm looking at. So remember, you see how this is bearish. I'm going to draw the box opposite now. It's going to come from up here, down here, right? Then you have this box over here. And there you have it. So now we're looking to break under this 127 to get to the bottom of this box, and then possibly down to this 122 area. So you can trade ranges. It's just recommended that you trade ranges with smaller capital. That way you don't get caught and chopped, because when you're trading inside of a range, it's extremely difficult. It's more for a skilled trader. If you don't have the skills and you don't have the experience, I would wait for the breakout or breakdown of the stock and not trade the range, right? So you know it's ranging when it's going sideways like this, and you can see that it's not ranging up or ranging down like it was over here. So that's it, guys. Remember, trade safe, trade smart, and let me know if you have any comments, concerns, or any tickers you want me to look at. All right, safe trading, and until next time.